How to trade credit spreads with Lux Algo is what I want to talk to you about in this video, going through a live trade that I recently took, trading SPX bear call spreads, and we're starting right now. All right, so let's dive into the video. I'm going to do this presentation a little bit different. I'm using Evernote, where I'm actually taking screenshots of the chart and the order and all that stuff and kind of putting it in a chronological order. That way you can really see the entire trade process. And I think that's probably one of the best ways to do it. So a little bit different format. Press the like button or let me know in the comments if this format works for you. I think it's going to be pretty good because you get to see everything and it's easy for me to track, and I'll be able to do more of these. So let me know by hitting the like button. Let's go and get started. So I have the date here. It's July 12th, 2021. And this was using the 1 hour chart where I took a 2 DTE, that's 2 days to expiration, CCS, call credit spread. Some people call it a bear call spread. These are the kind of short terms that we use over on Patreon and in my network. We like to shorten things up a little bit. So DTE is the days to expiration. And in this case, CCS is a call credit spread. And real quick about call credit spreads, it's been really difficult the past few years to trade call spreads, bear call spreads in any sort of mechanical way. That's my experience. That's why most of the videos you see are all kind of bullish leaning, because the market tends to go up over time. But I decided to use the Lux Algo software to really fine tune some of these bear call spreads that I can get into to sort of hedge or just try to stay a little bit balanced. And I think you're really going to like, the way this works. So in the short of it, what I'm finding that if you want to play the bear side for call spreads, I really think you need some sort of technical analysis. Not as much on the bull side. We have some basic moving average filters for a lot of trades. But anyway, I'm trying Lux Algo for this, and I'm finding a lot of opportunities on both sides, but we're going to focus on the bear side today. So let's go ahead and get started. Enough of me talking. So I'll first want to show you the trade entry chart, and I'm going to talk through the different parameters of the Lux Algo software, the different indicators, if you will. There's a lot of things that it has, and these are the combination of things that I kind of am working with to trade call credit spreads. Now, any kind of credit spread is really, there's a different mindset in the most part with credit spreads. And the idea is we don't need the market to move anywhere. What we need for a credit spread to really make money is we need to the market to not go somewhere. So it's a different type of mindset. If you sell a call credit spread above the price, you need the price to not go up, or at least not go up enough for you to make money. And if you sell a credit spread below price, you need the market to stay above that level. So that's sort of the mindset we need to get into when we're trading credit spreads. Yeah, you can trade directional and whatever, but what we're trying to do is trade relatively non-directional and really just say that, hey, we just don't think the stock's going to go up over this period of time. And again, when we go back to this, we're looking at a 1 hour chart, and this is a 2 day credit spread. So that's the time frame that we're sort of looking at. So if we look at the chart, I'm going to walk through some of the Lux Algo pieces here. So this is the 1 hour chart of SPX, and I got a few things on the screen here. On the price chart, we have these red and green zones. They're clouds, if you will. I think they call them reversal clouds. You know, similar to a Bollinger Band or some sort of channel that sort of contains price. And, you know, in general, as the market gets up into that, it could be a sort of overbought resistance area. So we're kind of using that as a kind of overbought, oversold. The next thing are these predictive ranges that are on the chart. And a predictive range, the way this works is Lux Algo puts an orange line. This is sort of the, average, if you will. And then there's 2 red lines above and 2 blue lines below. And the idea is these lines are could be potential support or resistance. So when you combine that with the red and green clouds, we start adding to the probability that these levels will be a resistance level or a support level. In this case, a bear call spread, we're going to talk about resistance. Down underneath the chart, we have an oscillator. It's the Lux oscillator that I like to use a lot. It actually has 2 things in it, which I like, which has this trend indicator. So the trend is, let me zoom in a little bit. The trend is this sort of back indicator that's kind of slower moving, and then you have the oscillator. So I like to kind of look at all these variables, and if they're all stacking up to overbought or resistance or whatever, then we can look at the call spread. So the last thing, this is one of my favorite indicators from Lux. It is the Lux volatility indicator. Now, If you're watching this video, you're probably an options trader. And let me tell you, this is not volatility in the sense of the options volatility. We're not talking about IV. We're not talking about IV rank. It's really price volatility. I'm going to kind of interchange that word with maybe the word momentum might be a better term, because volatility, you can get volatility to the upside or momentum to the upside, and you can get momentum to the downside. So this, when I talk about volatility using the Lux volatility indicator, I'm not talking about options volatility. I'm really talking about price volatility. And just, as a quick reference, we can see as the markets, gapped up here in this particular candle and rode higher, the volatility went up. So I'm calling that bullish volatility. So what we want to do is we don't want to short bullish volatility because, we don't know when that's going to end, just like any kind of momentum. We don't know when the momentum ends. But what I am interested in is, when does that bull volatility start to fade? When that starts to fade, that's telling you that that upward movement, it's not that it's particularly over, but that it could actually be slowing down a little bit. So let's talk through this trade, and I'm going to put all these pieces together, and hopefully this will make sense. And the trade we're looking at is really where this arrow is. So this particular trade entry, this is where I entered the trade. It was Monday, July 12th. It was 3:30 p.m. So it was kind of end of the day. And I drew this arrow on. These aren't part of the indicator. We do have contrarian indicators here too that I did not use for this trade, but it'll tell you contrarian kind of sell and buy. And I kind of just use that again as an additional factor. I don't take these as buy and sell signals. But what we have here is we have SPX, again, hourly chart. It's moving up, and it's getting near this upper resistance level that the Lux Algo has placed on there. It's not quite to the cloud, but it's getting pretty close. And then the bull volatility has completely slowed down. So we had that spike up, it's moving higher. But then over the last several candles, and this is really throughout a day, the volatility has kind of slowed down a little bit. And towards the end of the day, that last hour of the day, the oscillator actually turned over, and this little red thing, that's actually a sell signal on the oscillator. So when I add these things up together, and I kind of took some notes here, the price is near resistance, the OS trend is up, but it's actually flattening, that's the behind one. We have the OS, and OS for me is oscillator, oscillator sell signal, which we just talked about, and there's low volatility, meaning the bull volatility that was last shown is actually kind of slowing down. So this is the end of the day on Monday. So at that point with SPX, we know we can go to a Wednesday expiration. So what I ended up selling was a 2-day to expiration CCS, call credit spread, where I sold the 4,400. That's this price. That 4,400 is actually pretty close to the cloud. So that's near a another potential resistance area, and I got $1.50 for it. So let's kind of look at what the option chain looked like at the time of entry. The order says $1.60. I had to mess with the order a little bit. You know how that is with slippage and stuff. I had to mess with the order to get it to get filled. But this is basically what that looked like. So I ended up selling the 4,400 at the time was a Delta 30, and I bought the 4405. And again, I sold it for, here's the order. I actually sold it for $1.50. And again, that was about 3:30 p.m. on that day. So the following day, let's look at the chart. And again, this is the same chart, but here was the actual entry. And here's what happened the next few days later. The OS trend was actually flattening a little bit. This resistance level actually held. But because of the bullishness, the Lux Algo actually pushed that range up and created new levels, but that previous resistance is now the middle range. So, we are kind of shorting the mini bull market here. But over the next several hours, the market basically traded sideways, and that's what we want. It's relatively delta neutral. We're not looking for a pullback here. The other thing I didn't talk about was the other sort of dashboard they have on the chart are other particular time frames. So we can see on the 15, 30, 1 hour, and 4 hour charts that the market is still bullish. So we have to be really careful when we want to short a bullish market. So, I'm not trying to hang in there and collect the entire credit. I'm really, you might want to use the word scalping or something like that. But what I'm doing is stacking the probabilities that over the next period of time, in this case, 5 or 6 bars on an hourly chart, that we can get some time decay in there because these are shorter dated options. So I was able to close the trade for, several bars later for 50% of the max profit. We'll look at the order here in a second. And again, this was the setup. So I took the money and ran. Here is the trade exit order. So I was able to buy it back for 75 cents or $75. And so when you sell a credit spread for $1.50 and you buy it back for 75, you get to keep the 75. You keep the difference. This was done at 2:03 p.m. So the trade was entered at 3:30 p.m. on a Monday, and then the following day, I was able to buy it back for cheaper. Now, I'm only trading this in one lot sizes at the time, so I'm still sort of putting these things together. But I've got several of these that I've been doing really well in, and I'm going to create more videos. So if you have any questions, let me know. I'm going to put some more information into the description if you want to find more information about Lux Algo and all that. But that's what I got, and we'll see you in the next video.